stop putting money in the market given the current state of the market. I don't. I didn't stop putting money in the market. I buy the dips. So remember, you're not investing for the next 3 months. You're investing for the next 5 years, 10 years, right? So 10 years from now, you won't remember anything about this day. You won't even remember this conversation. So if you're really an investor, you try to back up and think about the next 10 years. So I bought stock. I bought a ton of stock today. I bought a ton of stock. I bought as much as I could because I buy the dip. It doesn't mean I know what's going to happen. It just means I buy the dip. I don't think about it. I buy the dip. I look at it and say, okay, everything's cheap now. Let me buy the dip. And that's not because I know that the dip is going to end in 2 weeks. That's not because I know what's going to happen in April and May. It's because I know what's going to happen over the next 10 years based on 200 years of data in the stock market. You buy the dip, buying the dip works. Running away doesn't. That's what it is. Okay. So let me mention a couple more things. A lot of retail investors are panic selling. A lot of smart money is getting ready for the rebound for sure. And global markets are being hit as well as U.S. markets. So that's something that's kind of hitting things pretty hard. So some of the stocks you're asking me about, I can't really answer stock questions a lot of stocks right now. We can save that till class. So when we get together for class, we can talk about that. But for right now, I just wanted to come in and touch bases with you guys and let you guys know what I was seeing and what the issues are. And what I'll do over the weekends, I'll mention something in terms of what 4 or 5 things you want to look for going forward in the market this week. If you're not sure what to do, I think sometimes doing nothing is the best answer. Waiting and seeing. I don't think you have to act on every little thing that happens in the market. You emotionally reacting to the fact that the market dropped so much today is not really wise investing, because sometimes it goes down, sometimes it goes up. But if you're an investor, you're just an investor. And that's pretty much the philosophy that tends to work. I know that that's not as exciting as telling you exactly what's going to do or exactly exactly with certainty what's going to happen. But you can't do that. Nobody knows exactly what's going to happen. There's been thousands of research papers written where people tried to predict what an individual stock is going to do. Should I buy this stock or should I buy that stock? All the research says that that's not doable. But unfortunately, there are a lot of people on the internet who will lie to you, but they don't have PhDs in this topic. They haven't read hundreds of research papers on the topic. So they're going to say, no, buy this stock or don't buy that stock. That stock's going up. That's going down. They really don't know. They really don't know. So, but if you want to know what I did, I bought a lot of Meta. I like Meta. I think Mark Zuckerberg runs a good company, and I think that he's able to make good decisions. And I believe that Meta has a strong future. And also, just in case their future isn't as bright as I think it's going to be, I sold a lot of poor man's covered calls on Meta. So I made a few $1,000s selling the calls on Meta. So if you want to learn more about stock options and stuff like that, feel free to text the word options to 87948. Or you can also go to drboyceprime.com. I think stock options, environments like this are what options are kind of made for, because they allow you to kind of position yourself to benefit